The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on the second day of July, the first trading day of July, and I had spent a lot of time last week saying that we're going to wait for the candle of June to complete, because that's going to give us a tremendous amount of information. It did complete. And what I'd also mentioned is that there have been times in June where there's been a spiral to the upside on the last day of the month. And we'll see if that's going to happen today. That was on Friday. There was an opening burst of energy and then a complete failure and then a real big sell-off into the close. That said to me, and I spent a lot of time for my subscribers to my opening call newsletter, daily newsletter. It is a daily newsletter because it comes out every single day of the week. I spent a lot of time looking at so many charts. Also did a whole bunch of changing of settings. For some reason this morning, and I can't remember, I think over the weekend, there was one bout of uncertainty in my computer. And when I came back this morning, some of the settings that I had changed. I had to go back and do them. So it was really a weekend of looking at my craft, the Chapman Wave methodology, and assessing where are we, what has gone on, what in fact is left in this particular phase where I've considered that the tide has changed, going from a rising tide to a declining tide in the daily and weekly charts of the New York Stock Exchange, the Dow, the S&P, and a number of the sectors. But there was still some that had only just turned down last week. So let's go through the numbers. The Dow's down 144 at 24,126. It made a top at 25,402. The very next day, we set up in place a short position. We took off our long position and switched to the short. We remain short. And at this particular point, the 200-period moving average of 24,043 is really key. We've tested it once on Thursday, went under it, came above it. This is important right now. Normally, once that magnet is hit and there isn't an immediate V-shaped spring away from it to repel the magnetizing attraction of, in this case, 24,043. If you keep coming back to it, that's a negative. And we are right now, so we'll see what happens. I do have a reading. I saw it earlier, and then I forgot about it. Thank goodness I got reminded by one of our Chapman Wavers in the den to say that the Trin Gauge, Chapman Wave Trin Gauge, had given a very high reading. And that usually says within 1 to 2 sessions, there should be a 9 to 11 point S&P E-mini rally, which should help the cash indices. I suspect if it's coming from this low down phase, certainly could happen. Going to have to just treat it as a bounce. Okay, I said we're going to talk about the weekly and monthlies. Weekly sell mode in the Dow. Sell mode in the S&P. Sell mode, that's Dow daily and weekly. Sell mode in the S&P daily and weekly. And the New York Stock Exchange, as I had said before. But this monthly chart has set in place a pattern that says it's either going to be a rectangle formation with very strong resistance in the low 25,000s, or it's going to break 23,334 support, and that would be very negative. But to do that, the 23,500 level in the 9-period exponential moving average, oops, I'm sorry, did I change it? Yes. So the 14-period moving average in the monthly is going to have to be really important to hold. On a shorter term basis, a close below 23,000, I would say 23,850 any day this week would be very negative, and we could start to see a close for the first time in July. And actually, Julys have usually been up, so that'll be the first week July that we've seen. If that is the case, and that would suggest very strongly that there is a down arrow about to come in the monthly chart of the Dow. But so far, the reason why I've avoided it is there's been no close underneath this green line, the 9-period moving average. And most important, in fact, you know what I'm going to do? I'm going to make it a little bigger because we want to be able to see it. So click, click, click. Let's see if I can get it here. There it is. Let's go to color. Let's go to scaling, style. That's what I want. Style a little bit bigger. Okay, there it is. Quite important. All right. So now, as it stands, first trading day of the first day of the new month. Nothing much to say other than sell mode is continuing in the short to intermediate term time frames. Here we go. Parameters to watch on the upside. Dow close above 24,357. The 9-period moving average would be very good. Then you get the 14-period very strong resistance at 24,475. S&P. S&P down 11. Let's go to 12 for now at 2706. Once again, same sort of thing. Oh man, I had all this written up so nicely. I got to do it again. No problem. Takes a second. Put in a down arrow. The top that was made in the S&P on June the 13th, I'm sorry, at 2791.47. 2791.47 on 6/13/18. Has in effect gone to a sell mode, and that's going to say that this whole area between 2700 and 2690, that has to be key support. A break under that would be very negative. And the weekly chart has continued in this lowercase h to lowercase m pattern, and the monthly chart is still holding quite well. I see no sign yet of putting in a down arrow, so we could use up time rather than price. We'll see. QQQ, very important, index 100, makes a top on the 20th of June at 177.98. Double check. That is correct. Gone to a trough B at 169.17. Yep, 17. Tried to rally on Friday, failed, and today went to a lower low than Friday, but a higher low than Thursday. Watching it closely, 170.86. Technicals are still very weak, but the stochastic is trying to attempt a little bit of a bounce here. We'll see. Parameters to watch. The close below 168.50 is very negative. The close above 170 would say, hey, we could try to test the upper level of resistance again. Monthly chart, I've got a G/C. I'm leaving it at that right now. My inclination is to say, hey, this can't be in a C with a D to come when the other indices, key indices, are so negative. Let's see what happens. That's all I can say. Monthly chart still very good. IWM, the Russell 2000 trading at 163.36, down 41. Made a low on Thursday of 162.26. And at this particular time, 162.26. At this particular time, is in a sell mode, had a Chapman wave 2-bar reversal on the 20th at 170.20. Next day was 170.08. We shorted at the exact high. We'll see what happens. We've taken some profits. I think it was a wise thing to do. We'll see what happens here because it's holding not too bad. In the weekly chart is an F/B. MACD is still good. Stochastics and 86 still good, but turning down. I'll be right back. Basil Chapman to continue with this analysis for the week straight after this break.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back. So I had a number of questions from people who want to know about my newsletter, etc. There's a free trial, 2-week money-back guarantee. And most importantly about it is every single day, let me just see if I can find what I've got here. First of all, let me just say, that in the Chapman Wave methodology, we're always looking for the highest peak after a low bar has been established. We've counted each successively higher peak alphabetically, uppercase on the way up, lowercase on the way down. The fourth highest peak, peak A, peak B, peak C, and peak D is the fourth highest peak, and that's the one where other things can happen. It can go higher. It can go low, it can go sideways. But at D, your foot comes off the accelerator, hovers over the brake, your little yellow light goes on just a moment to say, "Heps, this is where things can happen." Okay. Within that context, that wasn't a good move. Every single day, I give an outline of what we're looking, especially the market days, that is. And within that context, if I can just find wherever it went, right there. Check it out. There it is. Okay. I do a daily update. This is the daily Dow. This is with a couple of moving averages, but it also has the MACD and stochastic on the right and the unbalanced volume. I explain. And what I've been saying for a couple of days now, quite a few days, is that the stochastic in the daily Dow is between 11 and 13%. That's the equivalent, when I say, oh, this is really bullish, as long as we're in 93, 95%, you can stay positive for a long time. It's the exact opposite on the way down. When the stochastic flattens out and the expression in every textbook is under 20% is oversold and over 80% is overbought. And I'm saying there should be another kind of expression because over 80% is fabulous. Over 80, 90% is great. Under 20% is negative. Under the in the single digits, under the teens, is very negative. Overbought means it's over something that you're expecting it to kind of come back again. There's no connotation there until certain things happen. So this is a negative, and as I say, I've got that Chapman Wave trend gauge flashing. At any point, you could see a sudden 9 to 11 point move in the S&P futures, which should help the Dow and the S&P rally. But that's what we're looking at. Okay, and then I give my overview. I used to do it every day. Just there's no time. I said to myself, wait a minute, to say the same thing over and over. I even give every day, I give for my subscribers the E-mini futures, the daily, the weekly, and the 120-minute chart analysis. It kind of says it all. So I know to replicate everything, I just can't do it. So even over the weekend, I'm saying, so do I really have to do this again? I've said it all, but I said it again because I wanted to show the 5 quadrants. That is the 120-minute chart Dow there, 120-minute VIX index there, the Richard Arms Trin Index, and I call it the Chapman Wave Trin Gauge because I only use certain numbers. That's highs and lows over up volume and down volume. So what we're looking at, this is the daily Dow, just the bar chart, and here's the daily chart of the S&P. And then I give an analysis. I say what's working, what's not. The IYR, the REITs are actually quite good. The utilities have done very nicely. Transports are acting. We go through them all. Okay. And then I give you this. Everything we're looking at is mostly when we have positions. I try to give you a day-to-day analysis based on the Chapman Wave of what to look for every single day. What is this? Oh, this is for the week. I gave the Russell 2000 because we were short the Russell. I gave the daily, the weekly, and the monthly. Usually I stick in the 120 minute. There was no need for that. It was a negative 120-minute chart. So I do this every single weekend, and then every day I give a very elaborate synopsis. But in my Trader's Corner, that's what most people look at because that's got the positions. The first paragraph just sums up everything. If you're running out of time, you just don't know what to do. First paragraph you read, it takes maybe less than a minute, even less than a minute, and then you can immediately go scroll down and see what's new and what's not. So it's really a very, I would say, a very thorough look at the markets every day as well as the bigger picture. All right, so the IWM pulling back, trying to rally a little bit, is down 45 cents. Parameters to watch, a close over 164.50 any day this week would say, hey, not bad. Maybe it'll have a chance to go to 165.02, which is the 9-period moving average. And any break, a close below 162.26, I'd say 162 is very poor action. And that'll start to impact the weekly chart. All right, next thing I want to look at is gold. Gold was down when I last looked. It's down 10. Wow, I didn't even see that. So gold is I didn't even have a chance to notate everything here. We're in leg E in the weekly chart. We've gone way below. Last week was the week that closed underneath the low that was made the week of the 15th of December of 1254.60. We closed under it. We've got this week in which to close back above it. Otherwise, this is a really bad chart. And the monthly chart closed right on. Well, it went under, but it closed right on this major uptrend dashed monthly trend line support. Rising trend line support. Now it's gone under it. Oh, this is tough. But then, of course, and silver actually, so the dollar, gold is down 10.82, and silver is down 1.96. Just got smashed. Oh, I have to rechange that again. That is frustrating. And I understand the trade station, if my system just goes down very suddenly, they can't actually, I don't know why they can't. What happens is it saves it. But when I come back, I go to a different library. I go to like a month ago or 2 months ago worth of notation. That means I've lost everything that I've done. I got to redo it again by hand. I do it all by hand. Why? Because if you've seen a number of people have tried to notate automatically Chapman wave sequence, and it's great for a certain number of peaks. But then you get the alternate peaks. Or you get the ones that just visually you can look at and say, no way that's G, that's an A, or no way that's an A, that's a G. And the computer's not going to know it. So that's my only block, but it's great to have it notated. It comes up automatically, boy. Okay, here's the issue. The dollar, look at the dollar. It's up a little bit. It's up 54 cents at 95.04. We remain long the dollar from April the 6th at 90.07. It's trading 95.04. I like it. Yep, king dollar, it's back again as a king. There's no question about it. Are we allowed to say king today? Maybe we're not. Maybe we say the leader. I don't know. Okay, so I think we've gone through those things. What we need now is crude oil. Crude oil was down a little bit. Yep, down 21 cents. Had a spectacular move to the upside. Leg B, probably making a peak B. New leg E in the weekly chart. Excellent action. Says that crude oil has 71s as support and 70. It's already broken the resistance. So if it goes to 74.50, it's going to go even higher than that. All right, let's see where we are. I think TLT. How could I forget about that? So over the weekend, I said the TLT, the yields are still holding quite well. They haven't broken down. They haven't broken up. I think they're in this trading band. You can see a peak D in the TLT, and it has gone. This is going to be very interesting. It went to a peak D in the daily, and that was under 122.52 was the high back in the week of the 1st of June. 122.50 has been the high as of this past week. It actually had a peak D underneath the previous peak B, a peak B minus. Very interesting. I'll talk about that just as chart patterns go when we get back. Basil Chapman, Dow's down 140, basically 12.5 down, and we will be back and we'll take some of those home. Questions are lining up. I'll be right back.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Real quickly, I was just asked about the E-mini. Yes, the E-mini, S&P E-mini trading at 2707.75, down 13.75. It's really struggling here at this 200-period exponential moving average, up and down and up and down. But if it closes this is a 2-minute bar. Any time it closes underneath 2703 today and holds that for 2 10-minute bars, let's say 2 10-minute bars out of 3, that's suggesting that it could go low. if at any point there's a sudden burst of energy, and we've got that trend gauge suggesting that any time from this moment on we could have a sudden burst of energy. If you're looking at 2708, if it suddenly trades at 27, it needs to get to 27014, sorry, 2714, and hold there. There again, I want to, there it has to be 2 consecutive 10-minute bars. I wouldn't be surprised if it retests the high of the day of 2728. No. The high that was made at 11 o'clock, 27, what is that, 2717? 2719. Then it can test that 2719. All right, so that's that. Let's get back to our story. So we're looking at the TLT. If you go to my triple yield chart that I show subscribers every week, is in the lower range, but they're up. Look, the 30 years up, three ticks today, 29.86. I suggest to you that this is in a trading band, and that there will be some point if the Dow starts to break 23, closes under 23,850, there's a real good chance that the money will flow into the TLT, so-called safety of bonds. And then you got to watch those yields as they come back down. The 5-year is way above the low that was made on the week of the 1st of June at 25.71. It's trading at 27.43. It's also quite a bit below the 28.69 high that was made the week of the 15th at its at that bounce. The high that was made that is really important looking out is 29.41. Any close in the month of July above that would be, wow, the yields would be going quite a lot higher. Just real quickly, wood, iShares, global timber and forestry is trying to form a base. I think I forgot to put this chart to for subscribers. I show it every week. I think I forgot it this week. I was just so busy that it made a low right here at 76.15 on the 29th of June. The all-time high was 83.88 on the week of the 9th of June. So 9th of June, how could that be? 29th, yeah. So watching this closely because my eye says that the 200-period moving average of 73.80 is actually a target for wood, WOID, Global Timber and Forestry ETF, and that Philadelphia Housing Sector Index is just showing no strength whatsoever. All right, we had enough of this. Let's just go straight to our story. We've got a question about, let's see, GT says, okay. Oh, here's one. Tiger Technician show 629, not uploaded. Oh, that would be a shame. I thought it was. If it wasn't, I apologize for that. Yeah, obviously, it's really important to have my show upload. What's the point otherwise if it's not uploaded and shown to you for the period after my show, right? So, yeah, we'll see that that doesn't happen again. Question is, what about the S&P E-mini, ESU 18? What was the question, actually? You track by computer. I track only the price by computer, but the notation is me. I have to do every single one. Hundreds and hundreds and hundreds of thousands over the years. Actually, ages ago, I said it was probably more than 250,000. So I don't know what it is, but yes. And it doesn't take me any time at all. And I'd love if it was done automatically on a computer. But what would happen is you'd get so used to it. I know it from other techniques that I have that are automated, that you might get a little too used to it sometimes and overlook. It's like when you're learning to ride, you need to learn how to ride slowly, whether it's a bicycle or a car, because if you go quickly, you just aren't going to know all the subtleties, and that's the same sort of thing here. So yeah, in a way, I'd like it automated. I will be working on it sometime this year, I'm pretty sure. I've really started working on other things that are working very nicely, so I don't see why I can't be working on that. Next question is transportation. So the IYT trading right now up 69 cents at 186.92. Yeah, it made a round number high at 201 on the 12th of June. You try in an ETF to make a round number. I mean, you've got so many components that at any point can do whatever they do, and all of a sudden to see a round number and it turns out to be the very high of the move. To me, that's always suspicious. It always sets in place for me the chance to start looking at shorts or longs based on that round number, either at highs or lows. And in this particular instance, that particular run went sideways and then gapped and broke down and it's now gone from the 201 area, hit a low in the 183s, trading at 186.92 right now. That weekly chart says it's got the H going to a lowercase m pattern. Be careful. The monthly chart says, wow, if the IYT, the iShares Transportation Index, can get to the 189, 191 area quickly, that means within another 2 days, that'll say, oh, okay, more like a sideways move. If it starts to fan and it takes out 182 support in the next 3 sessions, this is 3 trading sessions, whew, that's not going to be very good. Next question is Boeing. 2 people asked about Boeing, GT and Bob. So Boeing right now trading down 227 at 333.24. I've gone through this many times. That was a top with a round number open at 372 on the 7th of June, and 374.48 was a high. It's come down. Gee, don't tell me I have to even do this one. A, B, C, D, E. Made a trough E. It's really struggling. I'm going to say it again. I contend that Boeing has made a peak of significance. I'm not saying what the downside is yet. I do have a clue, but I am saying that the cup formation formed in the weekly chart suggests that there will be a test of the low that was made the week of the 30th of March at 311. My eye says that the 9-period exponential moving average of 319 is absolutely important, but there's a chance that the black line, which is the 14-period moving average at 297, will be tested at some point. Now, wouldn't that be interesting when you've got the administration lambasted as one of the meanest, cruelest, et cetera, and all of a sudden you've got your PPA, which is the defense, the aerospace and defense area weakening, and that's saying, hey, globally, it looks more like peace at this particular time than war. Fascinating. If you look at the charts, it tells you a lot more than reading the newspaper. All right, next question is Boeing. So XLI, do I ever look at the XLI? I think I do. I haven't got a notator. I haven't notated. It's made a peak G top. This is the top. This is like the Dow. Made a top week of the 2nd of February. Peak E. This one actually has a way more negative pattern than the Dow and the monthly chart, because the MACD's already crossed negative. Stochastic's way down 51%, and it has a down arrow. So this is the S&P Select Industrial Spider Fund. So they have slightly different components. Whew, that's interesting, isn't it? Next question is UTX. What is UTX going? Yep, we're along UTX. It's down 99 cents at 124.04, taking a lot of profits off. We have just a small position, more as an experiment to see, will UTX hold the 122 level? We're in at 119s, but will it hold that level as the market is pulling back? I think it's going to have a tough time. I'll be right back, down 111.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. We're back. The Dow is down 102, 107. S&P's down 10. I would not be surprised after the struggle that's going on. And I was asked, who asked me about, Julie asked about the VIX, the VXX. Let me just do this. I'm going to go to the actual VIX because the VIX, all the VIX instruments have made peak Ds. The VXX, peak D in the daily. This is the iPath, what is it called? 500 VIX short term. So there's your peak A, there's your peak B, there's your peak C. It's another reason why I'm anticipating that there should be some kind of a rally attempt here. But the VIX closed quite high for Friday for the weekly chart. See the TVIX, another one of those VIX instruments. Look at this. Hey, what happened here? It'll notate it, renotate, takes a second. But that's a pity. Now I have to find out. There were all those great calls last week on stocks that I had done the notation on, which probably now I've lost, which is unfortunate. That's the way it is. All right, so TVIX. So the VIX itself, VIX.X, has got leg A. Let me just check. 13, 28, 30, 31. Okay, so here we go. A low bar made around about the 10th of June. Then it goes peak A, right there. Higher peak, peak B, right there. Peak C, peak D, yeah. And then it makes a peak 19 point. I even typed it in. I remember typing it in. So right here at 19.61 on the 25th, you've got a peak. And I think it's going to take a lot of bad news to get above that. So I'm just sort of thinking here we might see some choppiness sideways going into the holiday week, the holiday Wednesday. We'll see. I'll give you the parameters. Trading at 17.14 right now per $1.05. If the VIX index closes underneath 16.85 on any bar going into the 2:30 time frame, and the Dow's come back to only just a minus 55, the S&P's down -5. I think we could rally possibly either into tomorrow or into the close, and some a little bit tomorrow, a kind of a relief rally. Just mustn't fail. If the VIX is 17.15 right now, at 3 o'clock is at 17.35 or higher, this market could actually sell into the close. But I think there's a little bit, I've got, on a very short-term basis, my eye says there should be at least another rally attempt, about the 5th one in 5 days. There should be another one, and we'll see whether that can hold. Next question is, let's see. Oh, I did mention UTX, but I didn't give you parameters. UTX trading at 124.04. A close below 123 is very negative. A close above 125.25 in the next 2 days would be at least a sign to say, look, trying to stabilize. Weekly is holding quite nicely. All right. So here we go. The next thing that I'm looking at is a question about OAS. OAS is Oasis something or other. A, B, C in the weekly. This is trading nicely. It's at 1276, whatever it is. Oasis Petroleum. Let me just put this in. A, weekly. B, possibly a peak. C here. What was it? Two peaks at the same height. 1185 and 1187. Okay, so leg C. It'll make a peak C if there's no new high bar. I think this is holding very nicely, and if you are holding it, had quite a bit of a dip. Just watch it between 1220 and 1220 and 1320. That's kind of the range. If it can break above 1320, that's really good. It'll head towards the 1442 level to make a leg D. All right. So the next thing I want you to look at here is, so I had a question. Yeah, when I go to Amazon, you remember Amazon had that round number open at, now it's gone. Is it here? I thought I did that. Oh, there it is. At 1760 on the 21st. It had a high of 1763. It's pulled back quite sharply. It's making an H pattern. I'm watching this real closely because this is a tell. I've got this as a peak E. I could give it an alternate wave count right now as an E/B. I'm calling it E for now. Let it prove itself. The MACD is just about to turn down again. Stochastic's good, but turning down at 89%. Monthly chart is in leg E. Let's just see. I think this is a tell for us. If at any point in the next 2 weeks you see Amazon trading under 1620, that's 70 points down from here. That's a lot, but it's made quick moves lately. That'll be very negative. And that'll suggest 1660 in the 9-period moving average. No, the 14-period moving average in the weekly chart is going to be tested. And at any point, there's a bounce that holds for 2 sessions above 1738. I say, hey, just a sideways consolidation in Amazon. My eye says, no, I think Amazon has made some kind of a top here. That's more than short term, but so far less than intermediate term. We're going to watch it real closely. Okay. Next thing we need to do is, Facebook. A question about Facebook. Facebook is trading, here again. This is really frustrating. I have to call them again, and I have to find a way of finding where the file is, the very last file, instead of coming back and loading up in the wrong month of work. 203.55 was the high in Facebook on the 20th. 203.55. Oh, there it is. It closed at around number 202. I always look for those things, and you've got Facebook in a sell signal. Yep, a sell mode in the daily. Nothing yet in the weekly. I need to check this out. This is very important because Facebook, of course, is. Facebook right now, I'm going to call this a leg B, a peak B. I can't give it an alternate count. Isn't that interesting? So that says that Facebook, under the worst conditions of any market sell-off, should not take out 149, the low that was made back in March. 149.02, down at 23.7%. That was a big one with all the hearings and everything. So far, Facebook is looking very good, and the monthly chart is holding very well. All right. Question is, let's see. We are going to have to get restarts in the monthly candles if this bull market is to continue. Question statement. I'm going to talk about that quite a lot this coming week. And it will, you remember in my last webinar, what I'd said is that the monthly charts are thus far suggesting that it would be incorrect to suddenly extrapolate from the daily and even the weekly charts and say, the monthly charts, let me show you why. Let's go to the Dow INDU. The Dow monthly chart made a peak E. It's used up time and not price. One of the reasons being you had to first see the sell-off in the delayed sectors like the QQQs and the IWM, the Russell 2000. Now that they've formed at least daily sell signals to sell modes, that means that there's a chance that we get a unified sell-off. But that unified sell-off had a hint that it could occur by the close on Tuesday by the candle that was formed, a red candle, but still holding the green line, the 9-period moving average. So that's why I'm saying the first week or two of July is really important. Why? Because I want to see that the QQQs are following through to the downside. So far, hey, there's nothing much to see here. So if the QQQs at 171 start to trade under the 169 level, it sets off a daily sell mode, weekly, good chance that it's become a sell mode. And then you've got the monthly charts. That's the one that's hanging out there saying, well, let's see what happens now in the month of July. I'd like to go step by step. If you want, I could just extrapolate and give you numbers. They mean nothing until we get to the next step.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget, Steve's coming up straight after my show. Then you got Dave White. Then you got Tom O'Brien. Yep, and don't forget, if you want to check out my newsletter, The Opening Call, front page of TFNN, this has been a great time for it. We've had all year, we've had some really nice positions, and a number of 20%ers, number of 10 and 12%ers. And yep, we've had a couple of losses, of course, but I think way over the positives have outdone the negatives. So look at the arch, the lowercase h that goes to a lowercase m. That's what we're looking at in the 120-minute charts. I discussed in great detail what we're looking at. The MACD is still quite good in the 120-minute Dow chart. The stochastics pull back, but it's way above. It's had 3 higher lows so far, and there's been a divergence from the 23,997 low. So let me just make it real clear. Any rally that I'm looking at right now, I suspect is going to fail. I suspect we're in a phase that's lower lows and lower highs. The other thing that's most important is that if you have not had a chance to short because everything was just either too sudden, or you heard everyone talking about the bull market, so how could I short? Remember, you do your homework, and that's all there is to it. And then you put in your stops and let the market tell you. You've done your work. Now let the market tell you. But most importantly, what I am looking at here is that there's been a rotation, and the rotation had to wait for the IWM, the Russell 2000, which, as I say, we shorted right at the very, just about the top tick. And that IWM and the QQQs are suggesting that they need more. They need a full week, another week of negative action, a negative close this week. The IWM at 163.65 needs to close really in the 161s, and then we've got a real quick change in trend that's kind of activated in the daily and the weekly charts to catch up with the Dow, the S&P, which had 3-4 months in which to pull back. These guys just started their pullback. And I'll be completely wrong if the IWM on Friday, a week from, well, this coming Friday, if at 4 o'clock, the IWM is trading in the 167.50, 168 area, because that's just going to say, you know what, sideways consolidation, the S&P and Dow might not have to go down all that much more. That's kind of the way I'm looking at it right now. I think that we're waiting for these things to confirm a deeper correction in time, and then maybe price. Hey, stay tuned for Steve, and I'll be back tomorrow. Have a wonderful day. Check out the opening call.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.